Okay, so we are back with another video. In this video, I'm going to introduce to you guys a strategy that's going to make you a successful trader finally. Okay, so let's start with a bit of introduction of me. Okay, so I'm 16. I've been trading for around 3 to 4 years now. I have started with learning all of this retail stuff, okay, like patterns, head and shoulders, double bottoms, everything, support and resistance, everything you can name. All the stuff that's in the books, okay? I've been learning that for the first one single year. And let's be honest, I was not successful at all. That stuff did not help me at all. Then I was trading in a demo account using the retail stuff, okay? Just the normal indicators, the moving averages, the RSIs, the everything. But when I finally realized that all those stuffs don't really work, I've let's just say I've done a little bit of research and I have found ICT, the Inner Circle Trader. I'm sure you guys know about him. No, he teaches smart money concepts his own way. He teaches about fair value gaps, market structures, order flow, change of characters, liquidity, everything. That he doesn't use indicators, he uses the naked chart by itself. And I sat myself down and I learned all of that shit. Everything from A to Z, everything. I watched all of his content. I think I was watching like 2 to 3 hours a day of his content. He has plenty of explaining to do. I see. He has plenty of content and everything. Now, when I was heavy into watching his videos, I realized that that's something real. That's something real that I can go by, and I have actually got a new look on the charts and the markets. I have started seeing charts in the eyes of liquidity. Just basically liquidity, okay? That's the key, liquidity. So in that moment, the way I looked at the charts changed. Okay. So then I started trading a real account, which I have been trading for around almost 2 years now, okay, in a real money account. First times it has been, well, not so good, okay. All of the traders have to go through that season where they just lose money. I didn't lose very much. I just lost enough, so I learned my lesson. Then I had some success, and I have been having some success after all. After all of that, losing streaks, everything, I've been learning from my mistakes, and I finally come to the point where I'm pretty decently successful and a profitable trader finally after basically 4 years of trading. And yes, before you guys say it all, yes, I started trading when I was 12 years old. I stumbled upon trading the forex markets when I was 12, and I was getting invested in it. I was getting invested in it when I was 12 also. So yes, I think it has been quite enough time to say that I'm a decently experienced trader. Okay, so that was the introduction. Okay, so let's get to the strategy itself. So, after years of watching ICT and smart money concepts, this is what I have come to. This is what I have put together. For me, this has been the most successful strategy I've tried a lot of trading plans, trading strategies. For me, this is it. It might not be for you, but for me, it definitely is. So let's get to it. So this strategy involves seeing a break in structure. Let me put a line here so you guys can see what I mean. So this strategy involves a break of structure, a change of character in the market. Okay, so a turning, in this case, from bearish to bullish. Now the way that it does it is we have clear highs over here at this line. We have a displacement. Okay, so these candles, these 4-hour candles, close above these highs. That's a break of structure. Okay, so that's the first thing you want to look out for, a break of structure. That's the first point of it all. Okay. Then you are going to wait for a retracement. Here, there is a retracement. Then you want to enter on that retracement, in this case a long. You want to enter in a discount price, which means entering in not a premium price, but in a discount price. So entering below this 50% Fibonacci level. Okay, so this is 0.5. This is the 50% mark of this range. Okay, anything below, in a bullish perspective, is considered a discount price. A discount price is where you want to enter your trades. If this was bullish, anything about this 50% would be considered a discount price. Okay, so in this case, anything below this is discount. And then what you want to look for after the retracement happens is a fair value gap or a order block below the 50%. Okay, so in a discount price. In this case, we have both. We have a fair value gap, which is just a candle that has no wicks besides it. Okay, so it is a naked part of the candle. As you can see, this candle right here has no wicks besides it. And we also have a order block right here. So that just proves to be more effective. That's your entry. So here is your entry. You place your longs here. That's your entry. First of all, I'm not going to set take profits and stop loss, just so you guys can see what I mean. That is your entry. Okay, so we have gotten the entry and everything. So to summarize, you want to do all of this with trading with the trend. Okay, so you guys should only enter trades that are going with the trend. You guys, it's such a foolish thing to enter trades that are counter trend. Okay, you don't want to do that. This not only but typically works when it is with the trend. Okay, so the first thing is a break of structure, a clear displacement. Okay, so the first is a clear break of structure, then a retracement below the 50% mark in a discount price. You are going to enter at a fair value gap or a order block, and that's your entry. That's the first point of the strategy. Okay, so we have gotten the entry out of the way. Now what comes? We're setting your take profits and your stop losses. As you guys know, you should at least have at a very least a 2-to-1 risk to reward ratio, but ideally you want it to be around 3-to-1. Okay, that means that if you lose, you win. You lose only the third of what you would have been winning. Okay, so you minimize your risks the most, in my opinion, the most important aspect in trading, in being a successful trading, is in being a successful trader is of course technical analysis. But technical analysis is nothing without risk management, guys. So for that reason, we are going to choose a 3-to-1 risk to reward ratio. So let's start with the stop loss. Where are you going to place your stop losses? Well, ideally, in this case, behind this low. In this case, below this low. Okay. Now, in other cases, if there would have been a fair value gap here, you would want to place your stop loss after the fair value gap or after the order block. So if price comes to meet that order block or fair value gap, it will react in a bullish manner before hitting your stop loss. And the reason I'm setting it here below this low is because in the case that price comes down and manages to take out this low, I'm no longer interested in this trade. I no longer think that it would work out the way I want it, so that way I don't want to be in it anymore. Okay, clear and simple. Okay, so where are you going to place your take profits? Well, in this case, what I do is I'm going to find the 50% mark of the previous trading swing, which is this right here. Okay, I know that price has to, no matter what, in most cases, has to reach at least the 50% mark of these swings. So just to be sure, I'm going to choose that as my take profit. So what I normally do is I look for a fair value gap or a order block or a very clear spot of liquidity above 50% mark, or in a discount price, or in this case a premium price. Sorry guys. So what you have here is a fair value gap right there. So that's going to be my take profit. And that's it. There you go. You can see this countless of times happening. Okay, so again, we want to go with the trend. You guys can see the trend is going up, which means it is bullish. It is bullish. It's going up. You want to take longs only. You guys see this as a break of structure. You guys could say this is just what I explained. No, it is not, because it is not a trade that is going with the trend. So for that reason, that is disqualified. But on the other hand, this right here is with a trend. But on the other hand, this right here is trading with the trend. So we are able to take that. We are able to trust in that setup and enough. We are able to trust that setup enough in order to get into a position right there. So again, what happened here? Break of structure. You guys can see break of structure right here. Then a retracement, in this case to a order block below the 50% mark into a discount price. Okay, so this is the 50%. This is the 50%. You guys can see it just stepped below that to run higher. That's it. Okay, so this is your long. In this case, I would take my take profit above this high, of that previous high, and my stop loss, well, at least a 3-to-1 risk to reward ratio right there. That's it. If you guys want to be safe, if you guys want to be really safe, you guys can wait for a second break of structure right there. Then a retracement to well, this is actually this is a optimum trade entry right there. I'm going to explain what it is. Yes. So what a optimal trade entry is, it is also a strategy. It is also a setup by ICT. ICT said the optimal trade entry setup is also working. It's also good. Well, what that strategy says is that strategy consists that strategy includes a Fibonacci retracement level, and the optimal trade entry level of this Fibonacci is where you want to enter. Where is it? It is either at this 0618 level or at this 0705 level. So those two levels are your entries. Okay, as guys can see, it has also worked out here. This I think this strategy is really just using the principles of price going below the 50% mark and buying in a discount price. It's just really that. You place your take profits at the symmetrical swing opposite of it. So you take this swing right here, take the length of this swing and project it upwards, and that is your take profit, which is this -1 level is exactly this swing's high and low projected, reversed on top of it in this case. Okay, so that is another ICT strategy. Now we can go all day. You see a order block right here. What does price do? Price comes back to it. It reacts off of it. You can take your take profits above this last major high. Stop loss below the order block. And there you go. Boom. Take profited. That's really it. I can go on multiple examples of this break of structure, retest below the 50% mark in a discount price into a fair value gap, and that's where you take your trade. That's it. I can show you guys multiple examples because it's all over the charts. No, it happens quite often. Okay, so that's it. That's really it, guys. I hope you guys understood it. No, in my previous videos, in my previous 2 videos, which I made this start of this week, I made the first one on Sunday, second one on Monday, I think. And what I said, you guys can go back in time. You can go and watch those videos. What I said when price was here. This is exactly what I said. You guys can go back. That price will be bullish from now on up until this fair value gap has been filled. Now, when price was around here on Monday, I made another video. Price was here, saying that I'm expecting a retracement from taking this buy side liquidity. I'm expecting a retracement down to this fair value gap. Guys, what happened? Retracement filling that imbalance and reaching my target, that fair value gap. Exactly what happened. There's really no excuses to be said. There's nothing to be said here. It's plain and simple, clear. It's crystal clear. You cannot say anything when I have perfectly predicted the market's movements. with this strategy ahead of time, ahead of the whole week. That's it. Okay, so that's what it is for today. I hope you guys enjoyed it. I hope it helped you guys at least a bit. I hope you guys can use this strategy for your own advantage. Okay, so that was it for me. For more videos like this, for more advices, for more teachings. I really, what I do is I take ICT's content and process it to you guys in a way that is more understandable, and really bring out the major stuff in ICT's teachings and everything. So I hope you guys want to see more of my work. That's it. Like and subscribe to my YouTube channel, please. I'm trying to grow it. I'm trying to make it big, really. Okay. So see you guys in the next video.